Let me pull up. Here we go. Hey, Richard. Hey, Wade. I got a really cool trade for you guys up my sleeve today. Now, I don't want to spoil it just yet. I want to confirm it. I want to make sure it's one that I'm going to take with my own money, not just one that I think could be cool. But it's an earnings play. Let me pull up Lance's scanner. One of the cool things about here working with so many great traders is I get to use all their great tools. So I'm gonna pull up Lance's scanner, see if I see anything. Ooh, had a little something yesterday. Gary, you're already on top of it. Gary already knows what it is. He's been paying attention. Thank you, Patrick. Thank you. Hey, Thomas. Let me ask you guys. Lulu is still down. Who's enjoying the trade so far? Anyone? Obviously not every trade's going to work. Uh, Bill just noted Lulu is down. You are right. CRM, that's Salesforce, they're down. We are crushing it on quite a few trades. I'm loving it. Like I tell you guys, I take these trades with my own money. One of the benefits here is when I give you guys great trades, I make money. So my goal here is to make these trades as good as possible for you guys. I'm still in Lulu too. Yes. But overall, rocking and rolling. This doesn't even include, I think we've hit quite a few of those overnighter trades. This is just what's live right now on my Thinkorswim account, not even including the closed trade. So far, loving it. What is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 9 out of 11 on the open ones right now. I can't complain. Well, let's jump right in. Telegram post of the week. I posted this as a Monday pick. I mentioned it in Tuesday's class, and I mentioned it last Thursday. AVGO is probably the strongest chip stock right now. That's Broadcom. I'll type the ticker in here. The reason I liked it last week, I'm going to pull this up. Let me do if I can get this. The reason I like AVGO last week was not only has it been in a great trend, but it also has been outperforming Nvidia. It isn't right now today, but see how Nvidia's been stuck down here? AVGO has been trending higher. It had a huge gap down on the DeepSeek news. Remember that from the other weekend? Huge gap down. And a few days later, it started filling that gap. That's why I said to you guys, this looks like a great buy. Ended up shooting higher. This was after Google and AMD earnings went soaring higher. So this is my Telegram post of the week. I gave you guys AVGO from the Monday pick. I gave it to you guys in both the sessions. It crushed, doing well for me. And now I have a stock position. I don't have an options trade on it, but I have a stock position doing well. Now let's go ahead and jump in to the morning market update. We've got Stacy in here saying Nvidia is rebounding since DeepSeek. Yes, it is. I think there's a lot more questions than answers coming out of the DeepSeek news right now than initially. The initial reaction was pretty stark. Everyone, all the shares tanked, all the stocks tanked. Now they're kind of rebounding, saying, maybe there's a little, maybe it's not as good as we thought it was. So, anyways, let's jump into the news of the week. This is the economic news. I'll post this link in the chat for anyone who wants to be able to track the news. This is what I use. I make it sure it's a 3-star importance level. I just go to U.S. news. This morning, jobless claims came in slightly higher than expected. It is what it is. I mean, it's not like the end of the world or anything, in my opinion. We've seen so many different, every month or every week, it'll be like jobless claims is worse than expected. Jobless claims is better than expected. Jobless claims is worse. They end up revising the number anyways. Not a huge deal. Tomorrow, though, we have unemployment rate, which will be a pretty big one. All right, that'll come out 8:30 in the morning. They're expecting 4.1%. If it's above, that means a weaker economy. If it's below that, that means a strong economy. And the Fed monetary policy report. Now, so far this morning, markets are up slightly. They've pulled back just ever so slightly since I took the screenshot a few minutes ago. But the speculative assets leading the way, Bitcoin and emerging markets up the highest so far. Gold is getting crushed a little bit. I mean, not gold. VIX is down a little bit. Gold is just trading off the highs. It looks like it's going down. It's, in my opinion, it's just taking a breather after posting new highs. Gold is still a great buy in 2025, in my personal opinion. If you came to the last week's session, you know exactly why. Now, for next week, we've got a lot bigger news coming out than what we had this week. And I'm talking economic data. On Wednesday, this is probably the most important news that anyone cares about right now each month. We have CPI. That's our number one inflation measure. We want to see this dropping. We want to see it lower than the forecast, which hasn't been posted yet. But when they post the forecast, we want to see it lower than the forecast. It's come out at 8:30 in the morning. It's going to be market moving news. If it meets the forecast, it might just shake out and be fine. If it's above the forecast, that's going to be not so good for us. That means that there's any slim chance we had of rate cuts is just going down and down as long as inflation stays high. If inflation starts to fall, there's going to be renewed hopes of rate cuts in 2025. All right. So CPI next Wednesday, 8:30 a.m. Eastern. That's going to be a really important number. Does gold, Stacy's asking, does gold go up when there's inflation? Yes. Gold also goes up when there's lower interest rates. So I think gold is kind of in a win-win situation right now. High inflation potentially, or we'll get some interest rate cuts. I really think gold is a good asset to turn to right now. Good. Thanks for bringing that up, Stacy. All right, so here's the news for next week. We also have jobless claims, PPI, which is like our number 2 inflation measure, at least mine. So that's going to be an important one, PPI, and then retail sales to finish off the week. So CPI is going to be the big one of the month. CPI, it's what we've all been waiting for, and then PPI to follow it up. But let's pay attention to that next week. Now, for the charts of the week, it's funny. I keep seeing Bitcoin stuff all over the place. Bitcoin's been kind of parked out. I'll pull up my screen here if you've been following Bitcoin. Kind of similar to what we saw at the beginning of the summer or into the spring, beginning of the summer. Bitcoin surged. Let me make this a little bit longer. So we had the ETF launch right here. Bitcoin surged, doubled. Then we kind of parked out for a bit. And then it doubled, or well, I shouldn't say doubled. It shot up another 50% from there. And we've kind of been parked out a little bit. Now, if you've been following my predictions, you know that I think we're going to get a surge here, dependent on what the government does. But I think we should get a surge here till July, August, September range. And then I think that's going to be kind of our short-term peak. That's just based on what I'm seeing right now. Again, we're waiting on catalysts. If the government approves the Bitcoin reserve, I think that's going to be it. It's done. We're shooting up the 150, 200s range on a loftier side, but definitely the 150s range. And then we might park out there for a while. But with that said, if we're looking at Bitcoin whales versus retail traders, so you and I are most likely retail traders, and we might have a couple whales here in the room, but generally most of us are retail traders. Retail has been cashing out. That's this blue line, right? Meanwhile, the whales, the ones who have one or more Bitcoin since July of last year, have been buying, and now surpassing buying of the retail. So what we're seeing here is Bitcoin's parked out, retail's taking profits. All right, but what is the smart money doing? The smart money is buying up, which is still a very, very bullish sign for Bitcoin. If you want to get involved, easy ETFs to buy are IBIT or FBTC, no different than trading the SPY or QQQ. This is just for Bitcoin. All right. On the other side, we're looking at stocks. I've shown you this chart before, but percentage of stocks that outperformed the S&P 500. Let me blow this up a bit for you guys. Coming in 2024 at a bearish reading. And let me sorry, I'm just trying to make it easier for you guys to see. So what we're looking at here is this percentage of stocks in the S&P that beat the SPY. All right, does that make sense? So typically, about half the stocks are beating the S&P 500. In 2024, only about 25% beat the S&P 500. In 2023, only about 25% beat the S&P 500. All right, now, history doesn't always repeat, but it often rhymes, and this could be a little bit of a bearish take here, but when was the last time that we had 2 consecutive years with readings below 30? It was 1998 and 1999. I've made a lot of parallels and comparisons to this period of time that ended in the tech bubble, as you guys probably remember. However, one important thing to note is that during this period, we actually saw one final blow off top where the NASDAQ doubled again. Now, I don't know that we're going to see the NASDAQ double from here, but I do think there's a lot of room of upside left before we see any sort of real deeper recession. I think that's coming. I think it's going to be around the corner, but this is just something to keep an eye on. Things are starting to parallel out a bit. The good news here All right, you guys ready for the good news? Is in the year 2000 when we got the tech bubble, what happened? A lot of stocks actually ended up outperforming the S&P 500. So trading actually got easier as far as picking an outperforming stock, even during one of the worst times in the market. So the key here is when we do get that blow off top, maybe it's time to start rotating to some other stocks that have been left behind, forgotten about, because I bet you that's where the money's going to be going if we do get a tech sort of bubble of any sort. All right. Let's jump on into the seasonals where we're at month over month. Typically, February is a pretty flat month. Not much to write home about here. This is just the average return over the last 50 years. February's pretty flat. March and April are pretty good, but February's pretty flat. So let's go ahead and just take a look at the market overview and the technicals and see where we're at. Last week, I told you this is like 3, 4 consecutive weeks building. I did say I thought the S&P was going to come up and park here around the 600s range. Ended up shooting higher than that, but then I said flatten down so far. This is what I gave you last week. This was the exact chart. Let's see what's happened so far. We went up, flat, and then slightly back down. Now, where will we go from here? That is the question. Right now, the S&P 500, it's the exact same chart I'm showing you, but this includes today. Open higher, small gap filled to the downside. Almost got it. Not quite. You can see a little bit of a gap there. However, we'll see. There's one thing that can change this, and that is earnings, which we still have plenty of coming up. But overall, this was my prediction. This is what came next. Now let's see what's coming up. Overall sentiment, there honestly wasn't much of a change week over week. I kind of covered the same materials here with just the new data. Fear and greed index, it was a neutral last week. It's flipped to fear now, but not a huge change. Nothing too crazy. Percent of stocks above the 50-day moving average. Here's where we were last week. Here's where we are this week. Pretty much the same reading, nothing crazy. Now these are like the moves that we want to like pay attention to. See how big these moves are? Here we had that big DeepSeek drop. Was that DeepSeek? This must have been the tariff drop, and we just filled the gap from there. So again, this is the stuff we pay attention to. These big moves. Right now we're just chopping around here. Not much change. Same thing to go for stocks above the 200-day moving average. Now something still interesting, and it goes in line with one of that chart I just showed you of stocks trading above or beating the S&P 500, is that only about half the stocks out there are above their 200-day moving average. So again, most stocks aren't doing that well. I shouldn't say most, about half the stocks aren't doing that well. We've seen a very saturated market where it's just a few stocks leading the way. I actually, when in Roger's VIP room yesterday, we were talking about that, how it's funny. Roger and I end up trading a lot of the same stocks. And we're like, well, the problem is there's just not that many good stocks to choose from right now. That's why we're seeing a lot of the same names come up over and over again. Now, let's look at the put to call ratio. Again, we're right there in the middle. There's nothing extreme on either side, in my opinion. Typically, I mentioned it. We called this the other week. When it gets to the 0.7 ranges, that means that we're probably peaked out, ready for a pullback. I showed you guys how that matches up on the SPY. It's pretty spot on. That happened to us here. Granted, there was news. This drop didn't come magically from nothing. It came from news. But either way, when we get those readings super low on the put to call ratio, it typically means we're temporarily overcooked, ready for a pullback. When we're between the 0.75 to 1 range, that's kind of like a normal market, normal trading market, right? So this is still fairly bullish, nothing crazy. If we get above 1, that's typically when you want to be buying a dip. So here in August, you guys remember that August 5th, we bought the dip. It was way up here above 1. That September pullback, same thing. November, this one just spiked because elections, people were buying a lot of puts as protection. Markets didn't actually drop. So right now, again, not much changes week over week, just kind of in no man's land. So what's next? Well, I've shown you guys this chart a few times. I'm going to show it every single week in this session. But seasonally, if we're looking at post-election years, that's that green line, all, first year inauguration years, that's what we're in right now. This is the average S&P movement. Over the last, I believe it was 50, 60 years, maybe even more. It might have been 70 years. Might have been since World War II. It's kind of funny. We're getting almost this exact thing playing out right now. January started good, a little drop, got back to all-time highs or near them. And then in February, it says choppiness, pullback later in the month. That's all post-election years. The red line here is post-election years after incumbent party loss, or if there's a new party coming in. Again, Democrats are out, Republicans are in. So that's what this red line would mean. So it's just singled out for that. And it's also very similar to what we've been seeing. A little scare here in January, but then a good strong market going into February. We're now in the first week of February. So we're right about here. And then it says seasonally a drop. Now, I wonder, both these lines, whether it's all years or the new party year, they both line up. I wonder, my thinking is, and I was thinking about this yesterday, is think about how many changes Trump has already made in his first week, 2 weeks in office. The executive orders, the tariffs, all sorts of stuff. I mean, even like the TikTok stuff. I wonder if that uncertainty or that kind of what might feel like random activity is what causes this typical shakeout in a new presidential cycle. That's just a theory, just something I've been thinking about. And that might make a lot of sense. Kind of fear, uncertainty. We don't know what's next. Little sellout, but then look at this. We get strength after that. So just a theory. We'll see. The updated RSI shot again, still diverging. RSI. This measures the strength of our moves. It's sort of a momentum indicator. On this is the S&P 500 right here. So the S&P made new all-time highs, but the strength decreased. So we made new all-time highs on lower strength. Typically diverging means we'll get a little bit of a pullback coming up. So here, see how this is like trending higher right here? And the market's trending higher. That's good. That typically means markets continue higher. If I could go back in time and show you when we get these diverging lines, it typically means we might get a little choppiness, a little pullback, which honestly is healthy. We need healthy pullbacks. It's fun trading when the markets go straight up. It's a lot more fun trading. Let me pull this over here. When you get the like we did back in August. Let me pull this up. When you get these big deep pullbacks to the 50-day or the 200-day moving average, you can start to load up a little bit more position size. Up here, you're like, I don't want to go too heavy because it's due for a pullback at some point coming up, especially when you match up the seasonals and the sentiment. Um, so it's good. It's good right now. Things are good. No need to be fearful or anything, in my opinion, but we might see a little bit of volatility, a little bit more downside here in the month of February, which is okay because I think it's going to gear up for a really, really hot March, April, and May. So again, what is Scott? Can I overlay spy on the election in your chart? I was actually thinking about that yesterday, Scott. I want to. I haven't done it yet, but I'll figure out a way. Jeff, what are your thoughts on Apple? I'm in that trade with you. I'm in it too, Jeff. Just following the rules. We won't be stopped out unless Apple drops below. Unless it drops below 223.75, roughly speaking. So we should be still in it, Jeff. When I say pullback, how often does it happen a year? Typically, we would expect to see 3 to 5 pullbacks in a year. When I say pullback, I don't mean stocks going below the 200-day moving average. I mean getting into that. Roger calls it the twilight zone between the 50 and 200-day moving average. If you were to put a 100-day moving average on there, kind of in there, so somewhere below, at the 50 or to the 200 in that range, you'd like 3 to 5 of those a year. I think we had 4 last year. Again, those are really great buying opportunities when all things look healthy, which in my opinion, all things do look pretty healthy right now. Administrator, it just depends what you're going for there. Stop loss or stop limit depends on what your strategy is, what you're trying to trade. Now, again, for February, I think a little bit more uncertainty, but I think it's okay. A little volatility, maybe a better buying opportunity coming up. Again, I mentioned this earlier. What catalyst can change this? Earnings, of course. Today, after the bell, we have Amazon earnings. That's a really, really big deal. They just jumped back up to the fourth biggest company in the world after Google sold off. Amazon's a beautiful chart. Let's see this. In my opinion, there's no real edge in trying to guess on the big company earnings. It's not like you're going to find an options sweep that's going to tip it off just because they're so big. They get so much volume. However, expected move $15. So if I'm looking at the market maker move, so Amazon is expected today to either come back down to here range or shoot way up to here range. Kind of like what we saw in Meta. Let's pull up Meta. I love Meta. So Meta had their earnings shot way up. It might be easier if I can pull up So look for big moves here today with Amazon. Let me do this real quick so you can see the after hours. Big moves today with Amazon. Hopefully doesn't end up like our good friend Google. This is what happened to Google. But surprisingly, the market shook it off pretty good. But anyways, what can change this? Amazon earnings. We still have like Nvidia coming up, a lot of stocks coming up. Lilly today. Lilly's a stock that I really liked last year. We ended up rotating out of it. Let's see how it's looking now. Lilly's really gaining a nice little resurgence here. Let's see how they do. Oh, they already reported this morning. That's what that little, I should have noticed that. If you see that little sunrise, that means in the morning. This means after hours. Lilly reported this morning, looks like a small beat. This might be a good stock to buy on a breakout, in my opinion. Let's see how it did last time it beat earnings. Look at this. So beat earnings drifted. Let's see. Beat earnings did not drift. I like Lilly right now. It's breaking above that gap that it had from the previous earnings event right here, which means you would set a target about, let me pull this in the screen. So if I were to trade Lilly right now on an earnings drift breakout, I would set my target. See this wick down here on the lower end of the gap, 887. If I were to trade Lilly, I would set a target 887. Probably use a wrap order, maybe one of those elite trades I told you about. Maybe give it some time, a little bit out of the money. Let's just see what it's priced at. What did I say, 887? Let's see what this looks like. So this isn't bad. Nice, Jennifer. Made 800 bucks on the Meta Moonshot. Love that. Stacy, you have stock in Lilly or Amazon? Uh, you're asking if you should sell it. Let me tell you a story, Stacy. I one time had a ton of Nvidia stock, split adjusted $60, and they had earnings. And I said, oh, I don't know, it's pretty toppy. I don't want to be holding the bag. I sold it. It shot up to $80 the next morning, and I was like, oh no. That said, I've held stock through earnings. It's gone down. So I don't know if you like the company, Stacy. If you like the stock, if you believe in it, if you've done your research and like it, do whatever you feel most comfortable with. Again, I believed in Nvidia, but I was worried about earnings. I sold it and I missed out. I'm not saying that's going to happen here, but just do what you think is best. Jim says Meta is still going up, maybe in sympathy with Amazon. Maybe. I do think, Jim, that Meta is if you look at market cap, it's got a long ways to go to get up to like the Apple levels. The Apple, Nvidia, Microsoft levels, and I think it's going to do it. I really do. So this is definitely a buy one. Actually, I think we're going to trade it today. So, all right, real quick, I'm spending too much time here. The one trade I wanted to give you guys today was Fortinet. Actually, not the one trade, the one earnings trade I wanted to give you guys today. Fortinet, FTNT reports after the bell today. Now, why do I like Fortinet after the bell? Well, I'm going to wait to see if we get some confirmation here, but let me give you guys a little tip on why I like Fortinet. Fortinet has beat their February earnings every year for the last 11 years. So not all their earnings, but their February one. Every year for the last 11 years. We traded it last year and asked the pros, made some good money. I had one of the biggest trades of my life on Fortinet earnings. Now, again, I'm going to look here in the options chain. I'm not going to put a huge stake. I will trade it. I'll give you guys a trade here in a second. But I wouldn't put a huge stake in unless I get some confirmation. The reason I picked up on this was because I found orders in the options chains that were a little suspicious. Somebody put a lot of money in. It's like $650,000 with about a minute to spare before the closing bell going into earnings. A little fishy, right? So I loaded up as fast as I could, click buttons. I made like 18 grand overnight. It was awesome. But that said, I'm not going to put a heavy position on unless I see something sneaky going on here. But if you want to trade Fortinet, let's look at the market maker move, $11. I told you on Tuesday to wait to place a trade. Looks like you should have just done it, but hey, I wasn't doing it. So for Fortinet, and I'll type this up too, we're going to pick the tightest expiration we can. It's tomorrow's expiration. It's going to be a binary result in the sense that we're going to wake up. Actually, we'll probably know by about 5 p.m. today whether we're going to win or lose. So it's not like we have to hold this for a week. Again, it's earnings. You're flipping a coin. You're rolling the dice. I'm using an edge that I know that this stock has beat earnings many Februarys in a row. That's why I'm trading it. Now, to make a big position size, I would wait to see some confirmation. So, market maker move says it's at 105, $11 move. It says 116 if it beats. That'll be all the way down here. I'm going to cut under that. So, I'm going to play a little safer. Let me just check these prices real quick. So, in this instance, this would be a 200% winner if Fortinet gains $7 on earnings. We go a little bit riskier. Let's see. A little over 200, 300%. Oh, what do you guys want? If you guys want to buy basic calls, you can just buy a call of your choosing. I'll let you decide. Again, market maker says if they beat, they should get about to 116. So you run the math there on that. Gary says let's do the 200% one. All right. Oh man, the price. We'll just see what we get filled at. Let me just try this real quick. Ignore me. Let's see. Oh man, it's because we're waiting for the afternoon volume. All right, we'll try this one. I'll give it to you guys. I'll give you both. 112. This is what I'll be doing here. I'll do another one too. Stacy, where does a market maker get his info? That's a great question. That's just what Wall Street's setting the price at. So when you look at implied volatility, see how crazy high it is. Normally you see implied volatility about 40%, 50% on a normal stock. With earnings, they jack up the price of the premiums. So that they're and then that's where this is calculated from. How expensive are the premiums right now? So, anyways, if I'm going to do the 111, 112 call, I'm not going to pull up the calculators here. Hopefully, you paid attention in Tuesday's class. But we know our max profit is the difference of this. So 111 and 112, the difference is $1. Our entry price, we're going to call it 34 for now. Subtract 1. So our max profit here is 194% if Fortinet gains about $7 on earnings. Gain $7 in earnings, we make 200%, roughly speaking. It's expected to gain 11. So let me go ahead. I'm going to set a limit order. Oh, mid price jump. I'm going to do 33 cents because that'll be right at 200%. Filled right away. I did 3 of them, so that's $100. Let me get 3 more. Let's set it at 33 cents. Let it sit. Filled right away again. I probably could have gone cheaper. But now I've got $200 in Fortinet earnings. If they beat, I walk away with 600. If you want to go more risky, check this out. This is pretty awesome. I'll type this up for you guys. This is more risky. Everybody buckle up because the risk has increased. Call it 14 cents. Doug, I am not paper trading. Here. Let me show you. The real money. Now, this is more risky. But if you want to go a little bit further out of the money, you can get a little bit more profit potential. The price just jumped. Let's see if 15 cents will fill. I'll let it say it was just at 14 cents. But let's say you get filled at 20 cents. The max profit's $1. You enter for 20 cents. That means you have a 400% profit potential if you get filled for 20 cents. And it's not filling at 20 cents. All right, well, trying to show an example here. Fortnite's not playing nice. Let's say if it fills for 25 cents. There you go, Doug. If it was paper, it'd just fill right away. Doug, you heard I'm coming out with another strategy. When's the expected debut? I've got nothing currently on the docket. Just trying to keep constantly improving the current portfolios I do have. Can't see 112 Fortinet. It's right there. So I've not gotten filled here. I'll let it sit. But if you get filled for 25 cents, your max profit is 300% on this one. 22 cents. Let's see. 1 divided by 0.22. Your max profit is 350%. Now, let me tell you this. If you bought this one and Fortnite goes to 116, you lose money. That's why I don't like buying calls. That's why I like doing these. Oh, nice. You got filled at 25, filled at 27. So there you go. That's why I like doing these elite trades because my profit potential is really realistically just so much better. The way that I would kick myself, and I really wouldn't because if I hit 400%, I'm not crying. But if Fortinet went all the way to 130, I mean, these calls are going to go ballistic like 10x. So that's where you'll miss out. But the odds of that are not super high, according to the market makers pricing it in. Has happened before. I have not been filled, Manny, for 114, 115. For the 200% trade, my fill was 33 cents. And that was the 112, 111 expiration. Why is it with wrap trades, the take profit is not triggered even if the stock goes past the take profit price? I'm not sure what you're asking. It should, on expiration day, fill for a max profit. Chai in Miriam. All right. Now, here's a question for you guys. If I do get a big options order on Fortinet today, I'm going to post it in Telegram because I'll be going in with the heavies as I called them. Chai and Miriam, do I wait till expiration date? I do for a max profit. The cool thing about Fortinet is today's a Thursday, expiration day is Friday, so we only have to wait till tomorrow. Liberty got filled on the 114, 115 at 28. So guys, I just posted here in the chat my Telegram link. If you're not in Telegram, join now. I will let you know if we get a big options order on Fortinet. You don't want to miss it. You might want to miss it. I don't know. It's up to you. I don't want to miss it. So if you're not in Telegram, do that now. I got a question here. Where do you see the market maker numbers? Karen, if they have earnings coming up, you should be able to, in Thinkorswim, hit the trade tab. And you see that little yellow guy, market maker move, MMM. That's where you can see it right there. So they're anticipating about an $11 move, give or take. I like to go a little under and play it safe. But I have a couple lottos here if they hit it or go above it. Again, pretty awesome payouts. Thank you, Jennifer. Nice. Stacy filled at 32. Richard, Deanna normally filters through those. If Deanna can post that to you. When do I put my sell orders in? I normally don't. I normally wait till expiration day. And if we're on expiration day, wow, my mic just fell. This happened last time. If we're on expiration day and it's in the middle, I'll exit early. So if it's like 2 o'clock, 3 o'clock on expiration day on Friday, I'm not making money. I don't look like I'm going to walk away with the profit. I'll sell it early. Stacy, if it works and we're in the money, we can let it expire. You can also sell it at the open. So for example, I did a Ford trade yesterday. Here you see it's up 100% on earnings. But I'm just going to let it expire because Ford, let's take a look. 937. Typically we'll see a drift lower after earnings. So I'm just going to let it expire. I could try to sell it right now. I'll just actually try and sell one just to show you. Sell. We've got 45 of them. Let me sell 10 of them just to show you. The other thing is you pay commission when you sell. Right now I'm getting 43 cents on a 50-cent net profit. So I would cut into my profitability. I don't really want to do that personally. But if I did, let me just go ahead and do it. See if it'll fill. I'll let it sit there. That's how you would close it early. All right. I got to keep moving here. So there's my Ford just filled early. So I took profit on Ford. And I got filled on some Fortinets at 22 cents. All right. Everyone in Telegram. Wow, I went on a big tangent there. So here's my overall market overview. Here's what I think might happen. Again, it lines up with seasonality, lines up with the internals. Let's take a look at the sectors. Nothing crazy here. Again, the crazy thing happens in March, April, May, where we have 3 consecutive months where every sector historically is positive. Also lines up with our presidential seasonality. Really something to get excited for. Right now, kind of have a mixed bag. Nothing is, see this dark green? That's a really good sign. There's nothing dark green that says, ooh, we want to be really hot in one thing. We got energy and materials are the strongest ones, and I don't even think they rank that high. Energy, I think it fell week over week. Energy took a dive, so I'm not even super bullish on that. And materials is just getting beat up. It's at the rock bottom. So, anyways, let's take a look at the sectors. Last week I said I like discretionary, I like energy, and I don't like real estate. I would stay away from real estate or short real estate. Karen, yes, Ford is too late. Um, these are the ones I liked. This is the one I said short, and everything looked pretty good except for energy went right against me. So there's that. Um, real estate's still a lousy sector. If we're looking here, again, just wanting to find things that line up. I want to see a bullish current, like a sector that's currently bullish and bullish seasonally. Gives me good conviction. And I want to see one that's bearish right now and bearish seasonally. And the funny thing is, right now we're going to stick with the same sectors for top and bottom. Communication sectors, or the communication sector is technically the strongest sector right now. The reason I didn't circle is it because it's typically not so good in February. So it's really good right now. It's been performing well. But February's typically not so good. That said, March, April, May, that would be probably my top pick. But do you see, guys, why I'm not circling that? However, discretionary, we go here to consumer discretionary. It's a strong sector for the month. It's also number 2 on the list. That lines up, that marries up, makes sense for me. Uh, Same thing goes for real estate. It's near the bottom here. It's also the worst, well, second worst seasonal sector. So I probably, utilities is here in the middle. Maybe you could do utilities too. Circle that one red. But the ones that marry up the best are real estate short and discretionary long. So those are my picks for the week for you guys. Am I placing puts on the SPY in Mag 7 through end of February? David, I'm not placing puts on it. It's more so like I like to choose my position sizing, David. So right now I probably wouldn't be going, like my position size might be half as normally is. Versus like in March, April, May, instead of doing 5 contracts, I'll do 10 on a trade. Does that make sense? Because it could definitely be the seasonal. It doesn't, history doesn't always repeat itself to a T. So it could definitely, David, be a case where the markets do go higher in February and the seasonals were wrong. I still want to be involved. I just don't want to over leverage myself in case the seasonals and history and analysis is right, which tends to be the case. Secondarily, Costco is rising strong on Newton, but it's at all-time highs. Is it too high? That's a great question. David, Costco has just been on fire. It's got earnings coming up. I wish I bought the stock in my big portfolio. I thought about it. Ended up doing some others instead that are working out pretty good. Probably not as good as Costco. This thing's been a rocket. The question is it too high? I can't tell you, David. The thing about breakouts is momentum likes to carry. I always say with the Newton, the above average momentum creates for big moves. As long as it's above average momentum, that it has a good chance to keep going higher until it slows down. So is it too high? I don't know. If we said if we looked at Apple in 2014, we would have said it's too high. So it's hard to say. I like to trade it until it probably stops me out, burns me, or momentum slows down, which does happen. But if you can get 1, 2, 3 really good trades in, maybe 4, and then one goes against you, you can make some good money. Yeah, Walmart is running. Uh, Seasonality chart again. Do you want the Liberty? Do you want the sector one here? Is this the one you want, or do you want the um presidential seasonality? There you go. All right, you got the sector. Linda, I typically don't give exits on these trades. These are freebie trades, but again, as I've stated before, I pretty much always hold them till expiration. And on expiration day, if they're in between the money, that's when I'll close them. If they're way in the money, so for example, let's go take a look here at some current trades. I realized I had all the other portfolios open, so I'm not supposed to share those with you guys. But let's look at GE or Fang. So Fang, well, that's going to confuse people. Just short Walmart. All right, Walmart at a 93 call. If we finish above 93 on Walmart, we make money. Walmart's at 102. I have no reason to sell, guys. It would have to fall 10% from here for it not to work out over the next week. It's probably not going to happen, so I'm going to hang on till expiration and let it expire fully in the money. Exercise both sides, offset each other, and I'll get the full profit. Same for SC. Wow, I still haven't even gotten to the seasonal picks. I got a long ways to go still today, guys. Sorry. What does the IBIT sector fit into? Financial. Well, it's technically Bitcoin. I just throw it up there so you guys can see how awesome Bitcoin is. But maybe you could consider it similar to financial or gold. All right, let me keep on moving. When it's why you sell when it sticks in between and not let it expire. Administrator, if the stock, like so let's say here for example, let me go back to my Walmart example. Let's say Walmart. So I've got the 92 call and I sold the 93. If Walmart's at 92.50 at the end of the day, Friday, I will end up owning Walmart shares and it won't offset. It has to be above 93 to offset. So I really don't necessarily want to end up buying a bunch of Walmart shares. So what I'll do is I will just close out the position and then I'm no longer on the hook for anything, finishes wherever, and I will still make a small profit. Luckily here, we're so far in the money. We're looking good. All right. Let's keep it rocking. Top Apex signal of the week. This is the fourth week in a row I've given you meta. I'm doing it again. Uh, the first time was this signal. One of these signals hit the profit target. We got a new one this past week. This is currently where meta's at, just to be clear. But just wanted to show you guys that we have a new Apex entry from last week. Again, profit target price 737. Where's meta at? 715. Oh my word. It just keeps going. Not a ton of meat left on this bone, but there's enough to make money if you know the right options application. In my opinion, that's using wrap orders. There's a ton of money still to be made on this one, even though we're talking about a $20 move on a $700 stock. It's like 3%, right? Um, I think you have two 100% winners in here if it keeps going higher to that profit target. I'll give you a trade in a second. Hot sheet pick of the week. As a reminder, we had SE. This one's nearing the end of its trail. Let's see how we're doing. SE up 71%. Love to see it. Love to SE it. See. All right. This was a January 21st entry, 18-day hold time. So we only have 2 days left on it. Beautiful play. Worked out great. New hot sheet pick of the week. Tapestry. And they had earnings this morning, I think. I put it up here yesterday. I wanted to see how they did. Oh, my word. Why didn't we have class yesterday? Oh. Stock's up 13% today. We should have had the class yesterday. All right. Write down tapestry, however you say it, but thing is rocking and rolling. Made 1,200 on it. Jason on tapestry. Again, if you want all of my seasonal picks, you can get them right here. Wow, Jason made $1,200 on this one. So this was yesterday. I took this screenshot yesterday about 3 p.m. Here's today. We may have missed it. Maybe it'll go higher. Slight fade right now. Jason crushed it. If you guys want tapestry, okay. Thank you, David. Seasonally, it's a strong pick for the next 19 days. This is similar to one of those that Fortinet pick I gave you. It shows up to me. It shows up on my seasonal dashboard. This one's probably one that beat earnings every year for the last February, kind of like Fortinet, because this is going through the Fortinet. Actually, you know what? This window doesn't actually start till tomorrow, so we'll see. I want to give you guys a stock. I'm not personally going to put options on it. That move is pretty awesome. Congrats to Jason. Jody made $2,000. Oh my gosh, Richard made $9,750 on it. Holy cow. All right. I posted a link to the hot sheets in the chat. I missed out on this one. You guys didn't. Congrats to you guys. But if you guys want more of these seasonal picks, I mapped them out for a whole year. If you want to upgrade to the On the Clock Stocks membership, which is on the next page, you get a new update every single month, a new calendar. It looks pretty cool. I'll just show it to you guys real quick. But you can get it by clicking that link in the chat. This is where I pull these from every week. I'll give you like one from it, but check this out. The team makes it look beautiful, but like every month you get a new calendar with all the stock picks, their dates, the average return. Pretty cool stuff. That's in the On the Clock Stocks program, as well as personal trades that I take that I send out to you guys. David says it's very cool. Stacy is both. Awesome. Well, there's your pick of the week. Congrats to everyone who made a couple $1,000 on it by the sound of it in the room. But let's keep moving on to Newton Momentum picks. ISRG. Let's see how it's trading today. Slightly down today. This is one I really like. I put it in the Apex report. It's a really great stock. It was actually, it's funny. I always say like you would imagine me as a stock guy should know every single stock out there. I didn't know this one. A team member brought it up to me. They had some sort of relationship with someone who worked at the company or something. Hey, this is really good stock. I looked at it. I said, this looks like a great company. Typed it up to you guys. And I did not skip over the meta pick, David. Meta's right here. Apex entry, profit target 737. ISRG, SM. I don't think TPR was on the laminated sheets, but it's in the on the clock stocks members portal here. TPR. Back to ISRG. It's been a great pick here. I'll pull it up for you guys right now. Newton just turned green on it again. They're on the other side of earnings. Looks like they're going for a gap fill. So if I were to trade this one, which I am going to trade it, and I'll tell you in a second, but I would expect it to get up to 601. We're also going to trade Meta in a second too, if I remember what I put in yesterday. I definitely did. Yeah, we got Meta coming up soon for a real trade, David. Beth, yes, February has been released. Hot sheet, it's free plus shipping. You pay like $6 for shipping, 6.95. Send it to you in the mail. You can upgrade to on the clock stocks after that. For I don't think it's very much. Where you get a first month trial sort of thing, where you can get that access to those picks. So ISRG, really good momentum pick. This was left in from last week by the look of it, because Costco does not look like this anymore. This was last week's momentum pick. You want to see what Costco looks like now? So this was last week. Holy moly. Good thing we traded it. All right. Again, let's get into the opening playbook trades. 10:47, keeping us on schedule. We'll get done here in just a few more minutes, but now is the fun part. The live trades. We already did one on Fortinet. Let's see what else we can do. So I normally give you guys a monthly trade, a weekly trade, and an overnight trade. Let's talk through it. So ISRG again. I just said Newton flipped green. Momentum's green. That means it's trading above average momentum. So above average momentum tends to lead to new highs. Above average momentum tends to lead to new highs. This doesn't always work. Let's look at here. Here's a loser. Above average momentum, lost. But typically, above average momentum means drift higher. So we just got that here yesterday. I'm going to trade it for a month because I think we're getting two things. We're getting a momentum surge, and we're also, look at that just barely today broke above the gap fill entry. So gap fill means we got gap down on news. I like to take the high price of the wick and see if the stock breaks above that high price. We're then going to trade it up to the low price of the gap down day. So 601.77 seems pretty fair to me. Let's take a look at the options. See what liquidity is like on them, or if I'm going to go a little bit further, I'll shrink this up a bit. So today is February 6th. I'm going to give you a monthly pick. Not a ton of volume in the monthlies. Let's see what it priced at. That's not bad. Not bad. Will it fill? That's actually not bad. Let me type this up. I'll give it to you guys in the chat. ISRG is the ticker. 7th of March is the expiration. I'm trying to give you guys a month pick. So today's February 6th. So that's why I'm picking the 7th March. If it doesn't fill, I'll just go out to the monthly expirations, which will have a little bit more volume. But I'm trying to give you guys a 4-week play here. So I'm going to buy the 590 call. You might wonder why I'm doing that. Just because a little bit more profit potential here than a typical wrap order. Selling the 600 call. Right now it's at 465 debit. Posting it here in the chat. Sean says down 0.5% and downward trend on the daily. It may be. Sean, it may be on the daily. I'm not trading this for a daily. I'm trading this for a month out. So I want to see it trending higher for a month. That means it might fall tomorrow, might fall the next day, or it could go up the next day and the next day. I'm looking for a timeline here to say that by 3/7, it'll at least be right here. I think this thing's probably going to be way up here. But we're going to make a play that says it's going to be at least right here where you see my crosshairs at by that time frame. So we have a lot of time for a small move. And the reason, administrator, why I didn't do the 590 or 580, 590, one, it's slightly above that wrap. Number two, I'm going to go for a little bit bigger profit potential because, again, we don't need that big of a move. If it was way up here, maybe not, but we don't need that big of a move, and we've got a lot of time. So right now, where the trade's at 465. Our max profit is, our max selling point is $10. So let me get that calculator up. $10 is our max selling point. Let's say we enter for 465. That puts our max profit potential at 115%. If it gains about $13 from here, $13 on a $587 stock is a 2% move. So 2% over the next month. Again, if it gets close to filling that gap, should be golden. Let me go ahead. I'm going to let it sit in there. Mid price just moved. If it doesn't fill, remind me near the end of this class, and I might just do the 21st of March because we got a little bit more volume. Yeah, we'll see. Oh, and you got different strikes too. All right. Anyways, anyone get filled? Filled at 464. Filled at 460 on Fidelity. All right, I'll let mine sit. Filled at 460. Carol says. All right, I'll let it sit, but we'll keep on moving. I'll let you know if I get filled. Oh, I gotta post this in here for the team so they can send it out to you guys later. Currently at 465 debit. It's about a 115 max profit. If you guys have no clue why I selected those options or none of this made sense, you probably should go back and watch last Tuesday's training on YouTube recorded, and then go ahead and watch this most recent Tuesday as well. It's going to, in my opinion, tell me if I'm wrong, guys. Someone tell me if you hate it, but in my opinion, it's revolutionized the way I trade. My risk to reward is so much better than it used to be when I started out by using the wrap orders or the elite options. All right, let's keep moving here. ANET weekly momentum play. Last week I gave you Stacy. It technically is more like the elite one. It's just a wrap one shifted one strike out of the money, but yes. So last week I gave you AVGO on a gap fill. I really like the company, great company. It was a leading chip stock. ANET, guys, has been a rocket. This thing has been just an amazing, amazing company. This was the DeepSeek news. DeepSeek news, big hit. Broke above the gap. It's looking to fill the gap. We talked a lot about gap fills. Same sort of principle here. 128 would be a max profit target. However, we got earnings in 2 weeks, so I'm not going to hold it that long. So I'm going to trade it for a 1 week momentum play. 1 week momentum play. So let me go ahead and look at next February or February 14th, next Friday's expiration. ANET, we've traded this one a few times for some good money. We're going to try and go back to the bucket, see if we can pull some more. Perfect. So if I'm going to wrap it, buying 115, selling 116, February 14th expiration. Right now it's trading right in the middle of 50 cents. Perfect pricing for me. ANET has to gain 75 cents from here for me to double my money, depending where you get filled. 48 cents is even better. So again, ANET doesn't even have to gain $1. Doesn't even have to gain 1%. It has to gain about 0.6% from here, 0.65% from here for me to double my money in 1 week. Tiny move. Let me go ahead and type this up for you guys. If you guys are quick on your fingers, you can go ahead and punch it in right now. We're buying the 115, selling the 116. Currently in a net debit of 50 cents. Our max profit is $1. Our max selling point is $1. So if you enter for $1, if you enter for 50 cents, you sell for $1, you double your money. All right, let's see. Jim, love wrap orders, mini great trades. Thank you, Jim. Greg, am I always using wraps or do I use straight calls and puts? Greg, typically, I would say about 80% of my trades are wraps, but I do still use calls and puts from time to time. All right, let me get 5 of these ANET bad boys, punch it in. Let us see. I still haven't been filled on ISRG. I know some of you guys have. Stock is moving slightly. I wish there's a way to get this out of here. ISRG's at 480. I'll move it up here in a second. Are wrap orders called something else on Fidelity trades? Great question. Todd, it's just a basic debit spread, a vertical call spread. I call it wrap order so we always remember what strikes to select. If it's a wrap order, you're wrapping the current price with the lower and higher strike. So it's not any old strike. A wrap order is very specific to the strikes we select, but it is going to be called a debit spread in Fidelity or a vertical call spread. I have not been filled on ANET. No ringing of the bell. I've not been filled on ISRG. Greg, what makes me do straight calls or puts versus reps? Oh, I covered that on Tuesday, Greg. Um, it's all dependent on your underlying strategy. So I teach options, but options are not a strategy. They're an application for your strategy. So if your underlying strategy calls for very, very big outsized moves, like my perfect Apple trade, that's when I would use a call. Now, if my strategy just looks for stocks grinding higher, that's a small 1% move, 0.5% move, just a little grind higher momentum. That's when I'd use a wrap. All right, let's see. Can I tell you the profit potential if we did the 580? So this is ISRG. If you did the it's 585 to enter. Max profit or your max selling point, $10. So you do 10 over 585 minus one. Your max profit administrator would be 71%, 70.9%. All right, I'm gonna go ahead and bump up my ISRG entry to 480. See if I get filled right away at 480. So that's going to put my profit potential at 108% if ISRG gains about $11 from here. So what is that? Oh, quick math, 2% move. About a 2% move from here over the next month. Filled right away. Let's take a look at ANET. ANET should be filling. See if 51 fills. I'm just going to let ANET sit. It definitely should be filling given the current price. It's moving slightly higher. I'm going to let it sit on ANET. ISRG, yep, filled up 480 for me. So my profit potential is 108%. I did not set a price for ISRG to sell. My hope is that in a month we're weighing the money and crushing it. ANET filled for 51. ANET filled at 52. Oh, Liberty got filled at 50, 51, and 52. If you wanted to do ISRG for the March expiration, we just had a question there. I've got so many chats. Sorry, trying to keep up. Manny, if you want March monthly, honestly, this is what I would do. Manny, I would go 595, buy that, sell the 600. That's going to be our gap fill number. Also, is going to give you a little bit better profit potential. Oh, shoot. So that's going to be at 112% profit potential. Yeah. So that's what I would personally do if I were going to go to the monthly. I already got one at the March 7th. I've got another one sitting to see if I get that 465 fill. But let's keep on moving. I still ain't at no soup for me. And I can't believe it. It should be filling. I'm just going to let it sit. It's back to 50 cents. Still sitting at 50 cents. It should fill. We'll see. Did you guys get the... Did I post a trade in there for ANET? You guys, a lot of people got filled at 51. Okay, cool. Oh, the new ISRG I talked about. That's if you wanted to go further out. I'm not going to do it. I'll post it in here. If you wanted to do ISRG more time on your side, it would be 21 March. And then I would buy 595, sell 600. This is I'm not doing this, just to be clear. We had a question here. If you want to go further out. Dave got filled 52 cents on ANET. What the heck? I still think it should fill here, just given the price. Slightly below the middle. 50 cents. 51 cents fills right away on Thinkorswim right now. But I'm going to let the rest sit. All right. Carrying on. Let me type this in here for the weekly momentum play. Ticker is ANET. Options. Price is currently at 51 cents. Debit. All right. Carrying on. A bonus weekly momentum play. We talked about Meta a lot. Meta is cooking today yet again. So let's take a look at the weekly play on Meta. My options on Meta currently that expire tomorrow are pretty far in the money. Nice. We had another one too in Moonshots that was up nice today as well. All right. So let's play it again for next week. So Meta, I told you on Apex was a 737 profit target. I'm not going to trade that far out. I'm just going to do a wrap order. I might go slightly out of the money just because of the current price. We'll see what the pay is like right now on it. Yeah, it's just bouncing to 715. So let me go ahead and type this up for you guys. But there it is for you, Meta. 14th February expiration. Buying the 715. Selling the 1750 call. You want to get filled for about 125. $1.25 debit. That is going to pay 100%. This will pay 100% ROI if Meta gains $2.40 from here. So 0.3% over the next week. It's 123 now. I'm going to set it at 125. Let it sit. See, $500. Max profit, $500. I'll let it sit. It should fill. Meta is very, very liquid. Should not have a problem. Unless the price goes ballistic right now. Then that won't be so fun. But the thing is such a big stock. Such a, like the number is so large, it moves very quickly, which is good for us. Means these prices should move pretty quickly as well. Currently still at 120, 125, 128. Should fill. Why not 720? Get some width. You could. You get a little more profit potential too. 5 divided by 243. You get an extra 5%. It's up to you, David. If you're extra bullish, you can even go further out and get a little more profit potential. That's 150% profit potential if you do the 725s and 722.50s. Come on, Meta. Oh, there we go. Meta filled. 125 fill. You could do a credit spread over here. Oops. Just trading for the same exact price. You just have an increased risk of expiration. Okay, did we do our overnighter yet? No, we have not. Any quick questions here? And then, Sarah, we'll get the party started here to wrap things up. Stacy, you did Costco last week. Buying 980, selling at 985. Why is it showing up only 25%? Stock is at 981. I think Costco is way higher than 981. Costco's at 1050. Stacy. On my current meta trade, I'm going to let it expire, Ed, because it's so far in the money, and then my brokers will exercise my side, and then the person I sold it to will exercise their side, and they're going to net out at 0. I'm going to own 0 shares. How do you learn the basics of trading process, David? Every Tuesday. So today's Thursday. Thursday is what you saw today. It's very templatized. Same sort of materials each week. It's just updated with market data, new analysis, new picks, new trades. That's what we do on Thursdays. On Tuesdays, I talk strategy. I talk my trading process. So every Tuesday at 10 a.m., that's where we go through that. None of your 3 trades have closed yet, Bill. Is that because it's not? Did you just enter them today? I'm not sure what you're speaking. I didn't close any trades today. Yes, Sarah. Yes, you may. We did cover some seasonality picks, David. SC was one, Tapestry was one, and everybody made money on that today except for me. We got a great question here from Nathan. Can I go over what ideally you want to pay for a debit spread per dollar spread? For example, $1 spread, $2 spread, 50. I always try to, Nathan, if I'm doing a wrap order or roughly a wrap order, you always want to pay about half of what the spread difference is. So if it's a $1 spread, you want to pay about 50 cents. If it's a $2 spread, you want to pay about $1. $5 spread, you want to pay $2.50, roughly speaking. Does that make sense? Bill, you entered as soon as I gave you. You don't have to exit them then. All right, we just entered them. Jennifer says, watch the videos. You can pause them and take notes. You'll pick it up quicker than you think. Thank you, Jennifer. Always great seeing you. Kathy, we are doing an overnight trade. I gave you Fortinet, but I also have another overnight trade I want to talk about. I'm not going to give it away here, but I'm going to give you a little teaser on how we're selecting it. So that's what Sarah's going to play here next for you guys. If you stick around, it's me and Roger. We had a little class yesterday. Talk to you guys through a strategy where Wall Street is maybe forcing a stock lower, maybe below its fair value, and it's something that they're kind of getting their arm twisted. They don't really have a choice. We can take advantage of it by buying it at the close and selling it the next morning. Now, here's what's really, really important. Okay? If you're doing it on Monday expecting a Tuesday jump, that's great. That can be really powerful. We've done it before. We've made money on that before. What's really special about Thursdays, which if you look at your calendar, today's a Thursday, is options expiration is tomorrow. As you'll see today, that makes for a much, much greater profit potential. So Thursdays are really, really special for this strategy that Roger and I are going to walk you through here. So buckle up, pay attention. Again, if you're not in Telegram, we're getting questions about Fortinet. I'm going to post my high conviction play on Fortinet in Telegram if I get some cool orders coming in. With that said, I'm going to have another overnighter trade for you guys here. Just pay attention to this broadcast. You'll see all about it and how I'm selecting it.
Show you anything typical. Graham and I are not typical. When they made the word typicality, they did not include us in there. We're not going to make any future claims. You may lose money. Every example you'll see today was actually a live signal sent out in real time to traders just like you. No curve fitting, no back testing. Now from April through January, so let's see, April, May, June, July, August, September, October, November, December, January. That's about 10 months, a good amount of time. From live trades, we've seen a 60% win rate on options with an average return of 68%. That's a juicy gain right there. And an average return of winners and losers at 18% in 24 hours in a live model portfolio. That's a lot. That's a good gain in 24 hours. I like that. Now, we're not going to guarantee any specific results. That would be irresponsible. And there is a high degree of risk in trading. But and if you have any other questions, please let us know or go to the Prosperity Pub page. Now, buckle up because February could be the rockiest month of the year and also the shortest month of the year. We got presidential seasonality, right? Negative. RSI, it's diverging. And money is moving around different sectors faster than we've seen in months. Now, for the average investor, this can create a massive scare in your portfolio. But as soon as you'll see, my special guest, I believe, is setting up epic opportunities for us for this month ahead. I'm talking about traders to remember for a lifetime. And it's all thanks to the market window that targets 20 to 50% gains overnight just by entering one trade at the market close and exiting the next morning. It's not a once-a-month opportunity, not a once-a-week trade. The window opens up nearly every single day. And it gives folks a daily chance to bank a couple of $100 or more overnight from entering only at the market close and closing the position at the open. Like on October 9th, that's 33% overnight. October 10th, 49% overnight. Look at that, overnight. I'd love to get in on this. October 15th, 67% overnight. October 22nd, 42% overnight. And October 23rd, 114% overnight. These are some juicy gains. Now, of course, don't get too excited. There will be winners and there will be losers. There's no free lunch in Wall Street. But those 5 consecutive trades could have more than enough to double your investment. $1,000 into each could have paid out over $3,000 in profit by the end of it all by placing a quick trade before the closing bell and closing it out the next morning. So, my name is Roger Scott. Today I'm going to pull back the curtain on what might be one of the most shocking discoveries in the financial world. It's all thanks to an anomaly found by one of the fastest up-and-coming financial superstars, Graham Lindman, the man who was handpicked at age 15 to study under a banking vice president and futures expert, later scored a full ride to college for his mathematical ability. I think he got a perfect score on the SAT, if I remember correctly, the math portion.
Yep.
And see, I remember all this stuff. You told me this like 8 years ago. I still remember. I got a memory like an elephant. And he loves the financial markets. Fast forward to today, in 2024, he posted a 6-time market-beating return with this strategy, according to a third-party auditor. 41 out of 71 straight posted double-digit returns or more overnight. That's fantastic. Today, he's pulling back the curtain on something he believes could transform the investment community forever and ever. By playing it smart and targeting simple 20 to 50% overnight moves every single day, he really doesn't care what happens to stocks during the day. Meaning folks can spend time stressing out less about the Fed announcement or corporate earnings and instead do whatever it is they want because he's placing these trades at the end of the day. Maybe play some golf, maybe have a movie night with the kids, or maybe just spend a day with your family doing something fun, like I should be doing once in a while. Just take each day as it comes, knowing that every weekday morning, this powerful market window could deliver another healthy, juicy gain. So how does it work? And more importantly, how can you jump in on today's overnight trades? That's exactly what I'm here to uncover. Welcome to the Great Rotation. And folks, I think there's a great rotation happening in the economy right now, and Graham's going to be talking to you right now. Now, my name is Roger Scott, and our special guest behind the powerful overnight trades, he's a former SEC quarterback turned stock trading superstar. He's got over 150,000 followers. He started trading at 15 under the wing of a banking VP and futures expert. I think his name is Tom Busby. Mm-hmm. I hired him in 2018 to come to work and study under me, working in my home office, coding and creating some of the most powerful trading tools of the time. Graham actually put together the slide deck for my boot camp, if I remember correctly. That was a long time ago. Yeah. The last part, putting it all together. Known for consistently finding ways to double his account, like in 2021 with deep in the money options, 2023 with crypto options, and 2024 with his famous wrap orders. Now, if you haven't had the pleasure of taking some of his live trades with him, like the GGAL trade, the DY trade, the DE trade, the Frog trade, look at this. The $18,000 on the Fortinet trade. That's
that was a little tip for you guys. That was an earnings trade. Every February, Fortinet has beat earnings for the last 11 years. So I took advantage of that one last year. We're going to do it again. They have earnings tomorrow. Little tip for you. Anyways, I'll turn it back to you.
Little bonus right there. And many, many more. And many, many more. Now, today, you're in for a real treat because Graham is dialing up what he believes is an epic overnight opportunity. And you have a chance to take part in it. Now, Graham, I know you've got a busy day today, so I want to cut right to it. What's going on with these overnight moves, and how can folks take advantage of these, even if things turn a little sour for the economy in the first quarter?
Yeah, well, Roger, it's simple. Every day at 3 p.m. or right there in that last hour of the day, I'm watching for a specific market signal that could lead to a big move in the stock by morning. Now, I call this signal a liquidity flush, and I came to know it intimately back when I was working under a former hedge fund manager who traded millions of dollars. Now, this isn't a risky earnings move. It's not some sort of insider buy. It's actually a bit of a dirty secret around the money managing industry. But these liquidity flushes consistently trigger at the same time every single day, right around 3 p.m., and they couldn't be easier to spot. So let's take a look, guys. November 25th at 3 p.m. Keep in mind, this was a real trade. Everything I'm going to show you today are real trades I took with my own money. People like you were able to follow along. November 25th, there was a liquidity flush on GEV right at 3 p.m. And if you look at the chart, so this is an intraday chart, if you're looking at it, you can see exactly why it's called a liquidity flush. Because from 3 p.m. until the close, GEV began a terrifying steady move lower and lower. Now, that would definitely freak most investors out. But for anyone who understood what was happening behind the scenes, they would already know or have a good idea what could be coming next. Now, you could have traded this liquidity flush just by hitting a few buttons on your cell phone and then happily walked away to enjoy the rest of the day. 18 hours later, morning coffee in hand, just check out how we did on GEV. 24% overnight on the options.
Very impressive. Whew, Graham, look at that. 24%. I like that. That's juicy. At any time you can get 24% overnight, I call that a gift. I really genuinely mean that. That's a gift. The stock shot up $1,000. Starting stake would have $241 by the morning. That's a nice way to start the day.
That's right, Roger. And like I said, it's all by targeting a steady 20, 40, 50% gain every single day. And look, you don't need to be filthy rich to take advantage of these plays either. Just a couple $100 usually does a trick. Actually, most of the time it's under $100 per contract to enter. Knowing that someone could put in as much or as little as they'd like in this overnight phenomenon.
And you signaled this trade in real time, right?
That's right, Roger. And every example I'll show you guys today are trades from my published record, shared with people just like you. No fancy back testing, no curve fitting, nothing like that. Real trades. These trades are as real as it gets. For again, let's watch it happen again just a few days later on Netflix.
Let's take a
So
look.
here you see it. December 4th, a liquidity flush right at 3 p.m. as the stock was set sliding lower and lower into the closing bell. Now, investors in this stock must have been in panic mode all day long. But for anyone who placed a quick trade at the close, like we did, well, they'd be clocking out with another nice double-digit win overnight, 72% here on this one by morning.
Very impressive. Now, Graham, a $2,000 stake in this one would have produced $1,459 overnight, enough to cover 2 months of car payments, depending on the car you drive, with this one trade. And that's without having to bet the whole farm on some high-risk lotto plays. So, Graham, why do you specifically target 20 to 50% each night? Can you tell us this?
For sure. The math is simple. If you can make around 20 to 50%, and that's a really reasonable amount, we're not talking 500%, we're not talking just a simple 20 to 50% each or a few times per week, you have a legitimate shot at doubling your investment every week. Now, of course, let's take this with a grain of salt here. There's going to be wins, there's going to be small wins, and there's going to be losers too. And I always tell folks, never invest more than you're willing to lose. But you simply just have to win more and win bigger than when you lose to make money. That's just common sense for you.
Right, of course. Well, Graham, your track record has proved that making high probability trades every day is the way to go. Just listen to a few of these stories. I love listening to these stories. Howard says, a profit of $540 or 65% plus gain. Thank you for sharing this trade with us. Jason, 95% on APH. Great stock to trade, Jason. And I love Sean. Sean says, terrific system and one of the best I've seen. That's beautiful.
Well, Roger, that's the secret sauce, and it's simple. It's just making your wins much bigger than your losses. And with these overnight moves, sometimes the gains outperform my goal, like with my recent trade on NEM, Newmont Corp.
Yeah.
Now, imagine it's 3 p.m., and right on time, there's another liquidity flush, and this time it's on ticker NEM. Now, look at how NEM's share value burned up all day long. Down, down, down it goes. But with these liquidity flushes, that's all part of the plan, because fast forward 18 hours later, the very next morning, look at this one, 246% return overnight. Close the trade. That's it. We are out.
Beautiful, beautiful. That's impressive, Graham. That's nearly 5 times your daily goal. $1,000 into that one would have turned into $3,463. And let's remind folks, this isn't some back testing. This was a real trade issued in real time.
That's exactly right, Roger. But here's where it gets even better.
Better?
Because that was only one of 2 trades that we took that day.
Wow.
The other one was on Moderna. Now, this one paid out pretty nicely too, 43% overnight as well in the same day.
That's beautiful. Look at that. Now, Graham, trades like this could definitely make an instant impact on the lives of so many people, especially right now. I know you hear the news and you listen to the news. It hasn't been pretty lately, but Debbie, who actually took this trade, she did even better than you. Look at this. Nothing. Isn't that better? The best
Oh
feeling when
yeah.
people outdo you on these trades. I love that
Oh yeah.
feeling. I tried the order on Moderna and won 80% on it, $6,500. That's fantastic. Fantastic. Good job, Debbie. Good job. So, Graham, you have to tell us what's really going on here.
Well, Roger, have you noticed how liquidity flushes only start right around 3 p.m. each day?
I have. Now, why is that?
Well, that's because of an embarrassing cash bleed that Wall Street honestly can't avoid a lot of the times. Whether it's a bull market, bear market, good economy, bad economy, it doesn't matter. Every day, billions of dollars will vanish from the markets in a matter of minutes right out of massive Wall Street accounts. But unless you've worked on Wall Street and seen it for yourself, you'd never know about it. You might not even believe it.
Right.
But listen, guys, if you've ever struggled to hit your goals with trading, or if you feel like trading the markets is harder than it really should be, I just want to let you know you are not the one to blame. And I'm not just saying that to be some sort of nice guy here. I really mean it. Most people don't know what I'm about to show you. You see, a lot of people buy and sell stocks and options during the day when Wall Street has high ground. But if you're trading any side, anytime outside the market close, you could really be screwing yourself over unless you're Roger and know how to just be the professional day trader that he is with a 97% win rate. For most people, they're not hitting a 97% win rate, and here's why. If you take a look at this chart dating all the way back to 1993 through this year, what you're looking at is the average market return from trading during the day, that's that blue line below, versus only trading overnight, that's that orange line above. So the blue line shows you the movement during the regular market hours, what we know as 9:30 to 4 p.m. Eastern. Not a lot of action there, right?
Eye-opening chart, really, folks. I would really pay attention to what's on the screen right now because this is very, very eye-opening.
And this is over the last 30 years. We're not talking about a 5-year span or 1 year. 30 years, zero return from trading during the day. However,
Right.
that orange line up top is the movement that happens when the market is technically closed. That's the overnight movement that you see
Right.
up there. Now, as
Right.
you can see, there's almost no money to be made during the day. All the best returns have happened overnight. And when we
Right.
find these liquidity flushes happening just before the markets close, we've been able to exploit some of the most profitable overnight trades that I've ever seen. So let's take a look at NVIDIA, for example, back in July 17th. You'll notice here the share price burns up all day long, especially going into the close. So there's that liquidity flush right around 3
Yep.
p.m., down,
Yep.
down, and down to the close. But for those of you who took the trade right before the closing bell, before 4 p.m., like I did, could have came out on top. This one paid 58% overnight on the
What a beauty.
options.
What a
William
beauty.
took this one too. He said, "Thanks for the." He did better than me again. I did 58%. This is for my real brokerage, my real fills. William did a little bit better, 110% on Nvidia for William B.
That's very, very nice. Now, Graham, $2,500 into that one would have paid $1,470 overnight profit. That's a nice chunk of change. And with Williams' results, that's more like $2,750 overnight. So tell us what's going on here.
Well, Roger, liquidity flushes come when Wall Street has lost the high ground. It's one of their biggest Achilles heels. You see, in the last hour of the trading day, there's a little known market anomaly that can force Wall Street to completely surrender. So think about it like this, guys. If Wall Street's like a bank, so if someone gives their money into the bank doesn't just sit on cash. The bank wants to invest that money right away. So that money goes into stocks. And when money goes into stocks, stocks go up. However, if someone withdraws a large sum of money, then the bank has to free up that cash. What do they do to get that money? They have to sell the stocks, which can artificially push certain stocks lower during the day. And this is actually a big weak point for Wall Street. Here's what Wharton University's Itay Goldstein had to say. When skittish stakeholders cash out, fund managers may have to conduct costly and unprofitable trades to quickly raise redemption capital. And that's when you'll see a stock fall out of the sky in what I call the liquidation window. It's these cash bleeds from unprofitable trading that forms the liquidation window at the end of the trading day. So let's look at AMD, for example. Back on October 10th, right at 3 p.m., there was a liquidity flush, and the stock steadily fell into the liquidation window. That last hour of the day, lower and lower. Anyone who entered at the close, however, like we did, could have been paid big, 49% overnight on the options. Now, here's what's really, really important. If you're trading anytime besides right before the close, you're really shooting yourself in the foot. So let's take a look at it here. What would have happened if we got in before the liquidation window? What if we got in this one early? Well, at 10 a.m., if you entered up there at 10 a.m., you'd be losing money overnight. If you entered at 12 p.m., you'd still get smoked overnight. 2 p.m., you're probably praying to break even. And if you're trading short dated options, you're probably losing money in time decay.
Now, Graham, it's pretty clear that trading outside of the liquidation or liquidation window is riskier and may not give you great results.
And yeah, that's right, Roger. But when we're inside the liquidation window, we have a great opportunity. In this case, it was 49% overnight because we're pretty much buying at the bottom and then selling when it pops.
Right.
You guys see, every day, Wall Street firms are receiving buy and sell orders from clients, and this happens all day long. We're talking billions of dollars moving back and forth, $1.8 billion on average. Now, obviously, that much money is a market-moving stack of cash. Now, the big funds, they wait until close to the end of the day to see how much cash they need to give clients, and then they pull it all out there in that last hour of the day. Here's what the VP of Trading at Charles Schwab had to say about it. End-of-day trading tends to be dominated by institutional investors. Mutual funds typically wait to execute trades so they know how much cash they need to raise to cover the day's redemption. So they're just going, the money's coming in, money's going out, money's coming in, going out, and then the last hour of the day, they're saying, all right, here's the final total. Here's what we got to do. It's been this way for decades.
Yep.
Now let's look at one more liquidity flush, this time on General Electric, GE. Now, in this example, back in May, there was a liquidity flush right at 3 p.m. on GE, and let's look what happened next. Some bigwig probably called up the floor traders and said, hey, we need a ton of cash for our clients. Let's raise this capital. And as the U.S. News reports, when a portfolio manager decides to trade a position, the large volume is enough to influence the market price. Now, before the entire order can be sold, that heavy volume drives down the price, and a portion of the shares are sold at the lower price. So in this instance, the liquidation window opened there at 3 p.m., and it drove GE lower and lower into the close. Now, my system can't tell me who is pulling money or exactly how much, but it doesn't matter one bit to me which firm is causing the dump. All that mattered is that at 3 p.m., there was a liquidity flush on General Electric. And anyone who placed a trade during that liquidation window went to bed feeling confident, knowing that they could wake up with a handsome profit waiting in the morning. And sure enough, we did just that. This one really ripped at the open, 147% overnight here on the GE trade.
Very impressive.
Now, liquidity flushes have shown the power to anticipate these kind of moves pretty much any day the markets are open. You can always find opportunities, just like Modi, who's one of my Diamond members. He says, you've been consistently on the spot with all of my GE trades. I'm up and paid with subscription, plus some in the bank. Thank you, Graham. Well, thank you, Modi. But there's one day in particular that can have bigger moves than any other day or one moment in time, and I'll tell you what that is in just a moment.
Well, Graham, I can't wait to hear about it, and I'm really excited about the new opportunity you have dialed up for us today. But first, I got to ask, how do you spot these liquidity flushes?
Well, Roger, I'll show you. Let's see it in action on one of my favorite stocks, Apple.
Fair enough.
Now, here's a liquidity flush back in September 19th, liquidity flush right at 3 p.m. Remember, as the U.S. News reported, heavy volume, this heavy selling volume can drive down the price. A portion of the shares are sold at the lower price.
Right.
So here, if we're looking at the trading volume going bonkers in the end of the day, that's some heavy volume coming in.
Oh, yeah.
Pushing it lower and lower. So let's see what happened. Driving the price of Apple down well below its fair value, artificially pushing it lower. But here's what's important. The next day, when the markets opened again, the sell-off was done with the stock. This artificial selling pressure was over with, and Apple was able to shoot back up to normal value. In this instance, anyone following along with our real-time trade could have seen 56% overnight on the options.
Beautiful. And again, Graham, some of your students have done even better with your Apple signals than you have. Rochelle, hey Rochelle, I hope you're here today. Rochelle's great. She's from New York, but she lives in New Mexico now. Made $655 on Apple. Michael, I'm up $1,009 on Apple trade. I like that. Mike just did that Apple trade, profit $1,800 on 3 contracts.
And those are some truly amazing stories, Roger. And like you mentioned earlier, those stories, I would rather, obviously I trade alongside you guys. I want the trades to work out, but nothing feels better than seeing your guys' stories here in the chat or wherever, the emails. And as much as I'd love to take all the credit for everything we've been able to accomplish, this phenomenon was actually something that one of my former mentors stumbled upon years and years ago. Roger, you've taught me a lot of things, and I've grabbed things from Tom and other traders throughout the years. Here's what I learned from one of my other mentors. You see, years ago down in Fort Lauderdale, there was a small group of 5 investors from Sweden who wanted to trade a small hedge fund leveraging this same sort of weakness, these liquidity flushes that they learned from Wall Street. It's just a few traders sitting around a table working in an office that did not look anything like New York City. But they didn't really care about the decor because, as the story goes, money was flying off the walls like there was no tomorrow. You see, they knew exactly what to look for. It was a pattern that they could track inside of their high-tech code terminals. Now, the fund started small, 5.1 million in the book, but that grew fast. They would move 500,000, sometimes over 1 million shares in a single day, and it felt like there was no one stopping them. For instance, 2008, you guys remember all the major banks were going bankrupt. I mean, really, really bankrupt. That hedge fund was able to catch a whirlwind of a payday. Citibank was down 26% the day they spotted the liquidity flush. And while the financial world was burning down around us and banks were failing left and right, they were able to score 57% overnight on a bank. Funny enough, we eventually caught, what's that?
Impressive.
Yeah, and we actually eventually caught wind that Warren Buffett did the same exact trade. Now, the clients made a ton of money from that trade. And actually, this firm was really able to grow to a peak of 700 million. So it started at 5, grew to 700, and eventually the owner cashed out and called it quits. Now, Roger, this is when I was called onto the scene. You see, one of the hedge fund traders, he wanted to try to rebuild the system they were using. And you know me with my systems testing. He wanted me to do it all for him. So I got to work, investing in some of the most high-tech trading equipment out there to literally watch over 2,500 stocks every single day. We always monitor the whole market. And that's something that obviously no single human could do on their own. No one can track that all by hand. Now, once the system was completed and verified for accuracy, I actually started publishing these trade alerts with folks just like you, and the results speak for themselves. Just look at some of my highest overnight performers over the last few months. 140% on Enphase, we got 42% on AMD, 33% on MicroStrategy, 72% on Netflix. There you see 100% on SMH, 283% on NEM. Over and over.
Very impressive. Again, very impressive.
Thank you. And there's many, many more. And when I count for all of the trades, not only have we out-earned the S&P by 6 times result, according to our third-party auditors. You know Conrad, he ran this report, said, look, here's the final results. I said, wow, that's pretty good. Not just that, but only $2,500 starting out in each of them would have already paid not $10,000, not $20,000, but a really nice $39,432. And that's about, that should say, I think it was 10 months, since April. So 40
a lot of money
since April, not bad.
No, it's a lot of money.
Someone who is twice as confident and maybe started with 5K, you'd be knocking on the door at closing in on 6 figures in less than a year. So it's 78,864 from our live trades so far. So real-time issued trades. But today, right now, I am doubling down on this because, as we mentioned earlier, a little bit of choppiness, rockiness potentially ahead for the month of February. We've talked about this in my live rooms. RSI has been diverging. We're seeing strength decrease while the markets still hit all-time highs. Not great. Presidential seasonality is negative. It's typically a bearish month for seasonality. Also, all this news with tariffs and everything else, all these executive orders, it's just creating a lot of rockiness right now. Also, we're seeing a rotation among the sectors, and this is very normal going from January to February, money moving out of one sector into another, and we're already seeing it start to happen. If you look at the power rankings that we've been doing each week over and over again in my live trade rooms, we're seeing these bottom sectors really rotating at a rapid pace, unlike anything we've seen in a while. We have never actually seen this since I've been doing those live sessions. So money is moving around fast. Now, what does that mean for us? Well, as fund investment managers and Wall Street continue to rotate out of certain sectors and into others, they're going to have to dump the constituents to get out of that sector. So we're talking about selling big amounts of shares, selling big amounts by the truckload. And thanks to this great rotation, I believe that these overnight gains could get massive because it makes perfect sense. Think about it. The big funds have been selling shares, rotating out of certain sectors. And when they're forced to sell shares, what does that do? Money comes out of the stocks, artificially posts it low or pushes that price lower and lower. And artificially is the key word there. Does that sound familiar? We're talking about a liquidity flush. So when
Big
the
time.
average day sees, $1.5, $2 billion exchange hands, and we've pulled out winners like 25%, 58%, 80%. What do you think these overnight trades could look like with the great rotation when we're seeing money moving a lot faster than your typical day? Well, the overnight gains could get only bigger. And
Right.
that's why today I'm unveiling a special battle plan to take advantage of this phenomenon inside of my premium trading group, the Moonshots Trading Club. Now, here's how it's going to work. Every day, my system will be running through thousands of the biggest, most liquid stocks out there. And when it flags a liquidity flush that looks too good to pass up, well, I'll immediately package up the alert with all of the details and send it right to your email and cell phone right around 3 p.m. 2:30 to 3 p.m. is normally when I like to get it out. That way, you have plenty of time to take the trade if you choose before the markets close. I want to give you at least 45 minutes, an hour, hour and a half, so you have plenty of time. Now, the alert will look just like this, and inside you'll see all the criteria you need to know. Whether you're a stock or options trader, it's all in there. Then all that's left to do is place the trade before the closing bell, and the next day you could close it out for what could be our next great win. Just like this example here on Netflix back in February 14th, the system picked up the moonshot trade. That would have immediately sent you an email and text alert with all the information. Again, stock criteria included, options criteria included. I'm doing all the heavy lifting for you. You don't need to go trading in this on your own. And you could have followed along, entering just before the markets closed, and in this instance, woke up the next day to a 93% gain overnight, where
Wow.
$2,000 could have turned into $3,876.
Not too shabby.
Nope. And when you become a member of the exclusive, when you become one of the exclusive members to the Moonshots Trading Club, you can expect 1 to 2 trades each week on average. That's about 100 shots at these overnight opportunities each and every year. And on top of the email alerts, I'll also be sending the notification out via text and Telegram. Now, once you actually get the alert, following along is as easy as 1, 2, 3, just like with the next moonshot trade that my system picked up on February 21st with AMAT. Now, anyone who would have clicked a few buttons to jump in with this one could have seen a very, very nice 177% gain overnight with the options. $2,000 could have flipped into $5,550 overnight. Now, of course, there's going to be winners, there's going to be losers, big wins, small wins, and I'll be keeping track of each and every trade for you so you can easily see how good your results look compared to the S&P or maybe some of your other strategies.
Now, Graham, just based on the last two examples, we're looking at north of $5,000 in profit. So with that kind of potential, I got to imagine that this package is going to run a pretty steep price. I mean, your top trade alert program here at Prosperity Pub already runs as much as $5K per year. So I think that price tag would be more than fair considering your track record here.
Well, it definitely could be. But luckily for you guys in the room right now, it's not going to be $5,000 to become a member to the Moonshots Trading Club. Actually, I've set up an amazing deal for the first folks in the door today, and that today is underlined for a reason, because we're celebrating this great rotation. By celebrating, it just means I want you to be able to take full advantage of it before we're too late. But before I open the doors, I want to include a few extra pieces to the membership. First off, you're going to get the Moonshot Trading Club Options Crash Course.
Ooh,
Oh,
nice.
yeah. Inside, you'll get a 16-module series with our top options coaches and teachers who will help you go from beginner to pro when it comes to using options. You're also going to get my wrap order masterclass, the options calculators, a ton of extra value in here. And one thing I haven't mentioned yet, but I think it's every day at 11 a.m., our CS team, our customer service team is live to answer any questions you might have regarding options. So you're getting the whole package right here.
Now, Graham, your students love your trainings. Jennifer, y'all just wanted to jump in here, tell you I love your moonshots. My portfolio is up $10,000. That's with the losses. So worth it. Thank you, Graham. You rock. How about Richard? Hey, Graham, being conservative, I made $2,800 in last 2 weeks. Loving it. Greg, we'll make $1,000, over $1,000 on NVIDIA tomorrow. Also, did my own on gold and closed that out yesterday for 100%. Or Doug, best program I've ever seen. Now it's clear. It's clear that you're trying to do something, do everything you can to help new members of the Moonshot Trading Club succeed.
Well, my goal is to help the new members be able to hit a home run right out of the gates, starting with your first trade today. Now, I'm not going to promise it's going to be a winner. I can't do that. But if things work out like they have in the past, it could be a really, really juicy win. Now, here's what gets me really jazzed up about the all new Moonshots Trading Club. When you account for all of the options trades so far from our live trades, not backtest, nothing like that, real live published alerts, when we look at all of the winners and losers since April when I first launched this program, again, just 5K starting out, would have paid already $78,864 in profit. And that's just since April.
Beautiful.
So it's about 10 months. We're getting close to breaking that 100 grand mark, which I want to do here really, really soon.
Very
Now,
hefty. Very, very hefty. I like that.
oh, yeah.
And that's just since April 23rd, you say?
Yep. So not even a full year. And
Yeah.
that's started
Yeah.
5K. And you can start big, you can start small, whatever you're comfortable with. But these are a real-time trade alerts. So it's no back test. These are real people just like you were able to follow along with these trades. Now, if we were able to keep that pace up for one whole year, we'd be knocking on north of $100,000 in profits in the model portfolio on this example. Now, as you know, I can't promise any future returns. I'm not going to do that. I can't protect against losses. There's going to be winners. There's going to be losers. You should know that. But if we were able to keep this pace up that we're currently batting at, you might find yourselves in a whole new earnings bracket. So we had one of the best accountants in the world put together a special step-by-step guide for you called Your Taxes, Not a Penny More. Now, in this guide, you're going to see, guys, in this actually, if you are in any of Roger's programs, if you're doing the day trading, this is actually a really good guide to get your hands on because it's going to show you how to all the ways you can save as an active trader with tax trader status, which includes the loopholes on wash, loss, sale adjustments, and a lot of information that you'd probably like to know. Now, when the time's right, you'll have this in the members portal for you to read, not a penny more, right at your fingertips. Keep in mind, I'm not a CPA. I'm a trader. I'm not giving you tax advice, but we put this educational material together for you so that you have the opportunity to save as much money on taxes when the time is right. Now, my goal is to see at least 5x returns of the model portfolio this year, but obviously, no matter how good the testing is, no matter how good our live trades are, I can't guarantee any future results, but I can guarantee your satisfaction. That's why I want you to be able to join the Moonshots Trading Club today without having to think twice about the membership fee. Now, whether we end up with 5x growth this year or 100x, it doesn't matter. I want you as the user, as the member, to set the standard. You tell me if it's good enough for you.
Nice.
So for whatever reason, after your first 100 days in the program, after I send you over, after your first full year of use, after I send you over 100 Moonshot trades, if you don't feel like you got at least 5 times your money's worth, you call my team and we'll refund you every penny of your subscription cost.
Very fair. Very fair.
Yeah, no sweat. I want this to be a win-win. I want it to work for you and I want it to work for me. Now, the retail price is officially set at $24.95 per year, which in my opinion is a pretty great deal. And if you join through the main website, if you join through the retail page, that's how much it will say on that membership form. But for those of you who are hearing this broadcast right now, I have a few extra surprises up my sleeve, and it's going to drop the cost dramatically. So special announcement here. Today, I'm going to do something unprecedented. With that great rotation that we're seeing happening right now, we've talked about it from last week to this week. We've already seen those bottom sectors going crazy. The time for some of the biggest trade opportunities of the year is right now in this month. And thanks to what's going on right now, I believe the gains could get huge. And it makes perfect sense. Think about it, guys. The big funds have been selling shares by the truckload, looking to rotate out of certain stocks and into others. Now, when they're rotating out, they're forcing the stock price lower and lower, which probably sounds familiar. It's the liquidity flush we've been talking about all day today, pushing it below the fair value. So when the average day sees 1 to 2 billion exchange hands, and we've pulled out winners like 25%, 58%, and 80%. What do you think these overnight trades look like in the month of February when this great rotation is happening? We're seeing money move around the markets very fast. Well, these overnight gains, they could get huge, much, much bigger. So I want to celebrate this. I want you to be a part of this. And when you join the Moonshots Trading Club today, you'll get your first overnight opportunity. I've already got it ready for you today. And because this is such a rare opportunity, I wanted to make a special offer for new members today only to jump on in. So no, it's not going to be $3,000 to join. If you join today, you can get multi-year access for the cheapest price we've ever offered it. But if you want to join for the best deal, guys, you're going to have to make your decision right now because I got a new trade posted for you. It's up in the members portal and you can access it right now. So you got about a couple minutes here before the market's closed. So don't wait around. Don't wait till tonight. Jump in today, or else you might be kicking yourself by morning. And I don't want you to miss on the next hot streak. Roger, we're currently on a hot streak. We've just hit
Oh
3
yeah.
winners in a row, hoping we can get another one here. So come grab today's newest trade. Be one of the first to jump in on the sweet deal on the Moonshots Trading Club. Again, guys, click that link that Sarah's posting here in the chat. Go to prosperitypub.com/club or give us a call, 904-706-3537. Again, new trade for you guys today. On top of that, special cherry on top, we've got a multi-year deal running today only for the lowest
Ooh,
price that we've ever offered.
multi-year deal.
That's exactly right.
I like that.
Now, also, if you're one of the new members who joins today right here in this room, inside your members portal, you're going to see another bonus valued at $9.95 that you can access immediately for free. Give you a little hint. There's another way to trade these moonshots, and I'll teach you about it in the members portal. Now, this is a special guide available nowhere else in the entire world, and it'll give you insights on how I've been able to isolate these overnight moves over and over again. So if you want to claim this special bonus, then you need to sign up now. Click the link in the chat or give us a call. Again, guys, new trade posted for you today. You're going to get over 100 overnight trades over the next year. If you get the multi-year deal, that's going to be 200 or 300 trades depending on what you select. And obviously, you can get a pretty big savings if you do that.
Now, folks, don't forget, you'll get an entire year of Moonshot trades to make sure it's right for you. If you don't feel like you got at least 5 times your money's worth, then give us a call at the end of the first year and we'll refund your full subscription cost. And you can keep special bonus reports and training. Obviously, I fully expect everyone to be thrilled with this exclusive trading experience. But I'm taking the risk of the fee away from you so that you could take one of these spots without thinking twice. Go ahead, claim your spot and use the entire year to try out the Moonshot Trading Club. Join now, save $1,120 now.
Awesome. And I know we've got a lot of questions here in the chat. I'm going to jump in. We're going to answer all of those here in just a second. But first, let me answer some of the common ones. So you're probably wondering how much money is needed. Well, the trades average around $250, so it's definitely small account friendly. And actually, I've worked it down, Roger. So more recently, our trades are typically almost always under $100, sometimes in the $150 range. So they're very, very affordable, and that's on the options right there. So you don't have to pay $500 for an option. It's not $1,000 for an option. A lot of times we got $50, $75, $100.
Very reasonable.
Options.
Very reasonable. Will every trade be a winner, Graham?
Well, you know this. Of course not. No strategy wins 100% of the time. If someone tells you they have one that wins 100% of the time, you should probably run. Unless you're Roger, he might actually have one that wins 100% of the time, knowing him.
No.
But according to my tests and my real money trades, these moonshots have been extremely profitable for folks who stick to the system. And again, I've got a new one for you guys today.
Should folks be worried about more downside in the market this year? Is that really relevant?
Well, that's actually the beauty of this system is we're only exposed to the markets overnight. So if stocks are falling during the day or Fed comes on and says something crazy, not a big deal for us. We're just swinging the bat overnight and going from there.
Gotcha. Now, can you trade this? And I had this question. Can you trade this in your IRA or 401k?
It should be retirement account friendly. And if you're using any regular brokerage account, you can use it. You know, Robinhood, E-Trade. I use Charles Schwab. Any regular brokerage account does the trick.
Good. What's the next moonshot trade?
Well, Roger, I'm only sharing that information with today's charter members. Again, guys, new trade is posted for you. You got a couple minutes to join now before the markets close, about 45 minutes. So I would go ahead and do that now. So you can be hopefully, again, I can't promise a winner. I would never do that, but hopefully you'll be on the winning side with us tomorrow morning when we're waking up. Again, here's the total live trade results so far. We're nearing 100 trades already. And up to $78,864 in profit in the live model portfolio.
And not in a very long time. It's only been like 10 months, like you said. It hasn't been like that long.
That's exactly right. So far, so good. Again, our average return is 18%. That includes winners and losers.
Wow, that's good.
And that's not in 2 weeks. That's not 3 weeks. That's overnight. So our average trade pays about 20% overnight. Our average winner is about it's 67% overnight. So when we win, when we're on the right side, it's normally between 50 to 100% on average for the winning payouts. So you guys can sort of see the power of that right there and how that's been able to stack up so quickly in the model portfolio over time. So guys, go ahead and click that link in the chat or
click the link.
904-706-3537 to get started. It all starts with your first new trade today. Let me go ahead and open up the chat here.
Yeah, let's see what people let's look at these questions. I'm sure people have a lot of questions.
Do we give exit alerts? Yes, you'll get entry and exit alerts.
If Graham gets you in, Graham is going to get you out.
Yep, that's right. These are directional trades. We want the stock to pop overnight.
Bill says different stocks or same. Different. He trades different stock. Whatever's popping, he's going to trade.
Yep,
I thought
that's
you guys
exactly
were
right.
giving. That's Gina. That was me. You're confusing classes. That was my class yesterday. I gave 5 tickers yesterday during the class. Okay.
Awesome.
Are they spreads, Graham?
I will give you guys oftentimes both options criteria. Sometimes if it's a real short time to expiration, we'll just do an easy debit just to offset the time decay risk.
Beautiful, beautiful. All right. You're welcome, Gina. No problem. No problem. Yeah, if you want those, you can email me and I'll get you those, or just call customer service. But folks, again, you could do this in your IRA account. You don't need you're not doing any naked options. This is not an income program. We're not going to give you iron condors. And I'm proud to say that Graham is a very, very focused trader, and he's not going to disappoint you. He's not going to disappoint you, folks. He's going to do everything possible to help you guys make money. He loves making money. That's one thing I'll tell you about Graham.
That's
loves
right.
making money like the rest of us. Nothing wrong with that. And he's going to try to get you the best opportunities possible. He's very focused. He's very energetic. God knows he's got more energy than the rest, than I do. He's half my age. But this is important because he can focus and he can really hone in on these programs. Highly, highly recommend you give Graham a try if you haven't already. I don't think you're going to regret it. Highly recommend it.
Well, I really appreciate it, Roger. Those are really kind words, and I think you guys all know that Roger is the man. He was the original guy who coached me up, him and Tom Busby. But really, Roger, I got to spend a lot of time with you, sitting at your desk, at your house. That was a lot of fun. That was a while back. We were kind of reminiscing this morning about back what we had to do back then and what we were working on. But yeah, a lot of fun.
It was a good time, very good time. And again, this is the best deal you're going to get. I know we're going to be raising prices this year. Get this before the price goes up. Get this while it's on sale. You're going to get the best price possible right now. I know a lot of people don't think it's the beginning of the year, but it really is the beginning of the year. It really is the beginning of the year still in terms of how much time we have. So take advantage of this opportunity. Don't let it go by. In 10 months to make that kind of return, I think I have the slide here, right here. I mean, look at that. $78,000. What was the starting capital?
It's if you start with $5,000.
$5,000, 78,000, including winners and losers, over 10 months. Beautiful profit factor. Great punchy trade. So you could see these are not scalps. These are meaningful wins. 18%, including winner and loser. That's a winner right there. I think this is a winning formula. Let me ask you, how long is the average trade last? Can I ask you that?
Overnight.
Overnight, right. So you're literally, so you don't have to worry about day trading margins. You don't have to worry about any of that. So you're basically eliminating all the weakness of the market, and you're only getting them in for that sweet spot.
That's exactly right. And so far, really, really pleased with the results. I want to remind you guys, this isn't compounding either. There's no scaling that'll really blow up account. This is just a flat stake, $5,000 starting out, no compounding. So nothing crazy there. Now, Cyrus has a really good question here. Do we ever do puts? Do we ever go short, or are we always long? Cyrus, we definitely can do puts. We definitely can do shorts. I have done them in the past. However, this is kind of like the underlying phenomenon behind it all. More often than not, stocks are going up. So I want to be on the upside a lot more than the downside. Now, I will show you in the members portal how you can also trade it to the downside. That said, when you become a member, you should expect 9 out of every 10 trades, if not even more, being to the upside. So calls, long, very basic stuff here. But great question, Cyrus.
Great. And as you mentioned, they don't need a huge account. They could start this probably with just a couple of $1,000s, or just allocate a couple of what's the average size of a trade? Do you have that, or roughly?
The average, let me see if I can pull it up here. I'll pull it up down here.
You got to be prepared for me. I ask a lot of questions.
Well, I've been working hard. At first, it was a little bit more expensive, but I've been working hard to bring that cost down for folks. So it keeps dropping. Let's see, the last 20 trades, the average has been 79 cents a contract.
That's it? 79 cents a contract?
79 cents a contract.
Shoot, even I can afford that. That's really good.
That's
79
right.
cents a
So under
contract.
$100 per position.
Wow. What were they complaining about? What was it, 200 before that? I mean,
Well, it
$79.
depended because like sometimes you trade a stock like Netflix and it'd be like 800
Right.
bucks and like
Right.
I can't buy it.
Right.
Like, well,
Right.
So I
Right.
found some cool ways to bring it down, make it a lot more affordable.
Excellent. See, if there's a will, there's a way. Did administrator says, can we apply a stop loss to secure us if the stock goes against us overnight? How that's an impossibility, administrator. You can't do that because you see you're not trading the stock, you're trading the option, and the unless you're trading the stock. Now, if you're trading the stock, theoretically you could put a stop, but if the stock opens and blows through your gap, you're SOL. So if you're trading the stock, maybe. If you're trading the option, no way in hell. And yeah, so most likely not. That's not gonna. That's. I'm just trying to play it out in my head. I don't think that's gonna work out.
Typically, no. It's very
Yeah.
very binary. We wake up the next morning and see, do we
Right.
get our result or do we not? And when
Right.
bam, we're done. On to the
Right.
next. We don't marry a position, nothing like that. Just
Right. Right. It's a yay or a nay.
Yep.
Now let me ask you: do you ever trade through earnings?
we will occasionally. We did one the other day on Meta. Did 60% overnight on Meta, but
Okay.
typically no.
Okay.
Most of the time,
Okay.
no. Sometimes I'll give it a bonus if we're very bullish on it.
All right. All right. Fair enough. Fair enough. And you warn people that it's an earnings trade and to take small
Definitely.
size.
Definitely.
Graham says, so how much of the $5,000 do you use per trade? Do you mean risk per? Now, Graham, that's a good question, but a lot of people get confused. There's a big difference between how much the trade costs and what the average risk per trade is. So maybe Graham can give us
Yeah,
two
and
answers.
actually, that brings up a good point. I forgot. I give you guys with each alert, I'll rate it 1 out of 3. So 3 being the most bullish or most high conviction trade, 1 being just a normal trade for us. So level, like I would say, rating 1 star, that means it's a solid trade. Rating 2 star, it means I'm a little bit more bullish on it. Rating 3 star means I'm very, very. I'm going to weight more of my portfolio towards
Okay.
it. Typically, I'm putting about $500 in each trade, 1,000 somewhere in that range. If I'm very bullish, I will sometimes go a lot bigger. But again, I don't want to give you guys an exact number because I want you to make the decision of what's right for you. I don't want you to necessarily do exactly what I do because that's right for me. What's right for me might not be what's right for you. But I will give you the 1, 2, and 3 star ratings so you can kind of decide on your own.
Excellent. Excellent. Very, very good. Very, very good. Now, you said you've had how many trades?
We
So
are
far?
at 86 trades so far.
Well, yeah. I mean, somebody says 8 losses. I mean, 8 losses from 70 something trades. That sounds really good. I like the way that sounds. I mean, look, I've had 18 trades in the pit, 18 losers in the pit, but we've had over 300 trades. I mean, the losers are part of the game. They will happen.
What is
You know?
what is it that you call it, Roger? When something, of course, goes against you. When I first did this, launched it,
Yes.
the first few went against
Oh,
me.
Murphy's
It
Law.
really-
Oh, that always
Murphy's
happens.
Law.
Oh, that
Yeah,
always happens.
Murphy's Law. It was
Murphy's
no
Law.
fun.
Murphy's Law never ever. I mean, most of the time it doesn't fail. Murphy's Law does not
know.
fail. I remember I launched weekly cash flow, and my first trade was Carvana, and it was a nasty loss. It was a very, very nasty loss. But then we've been doing pretty good since then. So again, I mean, you're gonna have losers. You're gonna have losers. There's no way. There's no way to avoid them. It's humanly impossible to avoid them. The key here is we Graham trades with the odds. But what I like about this strategy is you have a net of 18%. That's a pretty high net, which tells me that you're actually looking for really good. You know, you're looking for a punchy gain here. Now, somebody had a question here about orders. It was Fred, I think. I saw something about market or limit orders. Fred, I can answer that question. I mean, I'm sure Graham will give you his take, but unless you're trading something like the SPY, and you're trading. I mean, look, if you're trading the stock, you really need to use a limit order. But if you're trading the option, I would definitely recommend using a limit order unless you're trading like maybe Microsoft or Nvidia, and even then I would use a limit order. What's your take, Graham?
I think unless you're trading SPY 0 DTEs, you're pretty much
Right.
I mean, everything's gonna. The thing is, you don't have to use a limit order, but you're just gonna pay more. So why would you pay more when you can save yourself some money? Use a limit order, just get it at the mid price, no problem.
Yeah, and again, that's usually the best. That's usually the best way to That's usually the best way to do it. And again, folks, my suggestion, the way I would do it is, anytime I start a new program, and what I would do is I would just take one contract or one share, I would test it out, I would make sure it works, that it works for me, and then I would start trading with real money. That's how I would do it. But again, everybody's got their own appetite for risk. Maybe this is your third or I'm saying if I was a new person and if I didn't know who Graham was and I've never had a program with him before, obviously I know Graham, I trust him, I would put a lot more than one contract or one share. But if you're new and you just want to dip your toe in the water, then start small and try it out. Question: what time are the trades? Oh, what time are the trades issued and time of close? I think Graham mentioned that you're issuing the trade the last hour of the day and you're exiting them on the near the open, right?
Yep, typically right around 3 p.m. So today we published a trade at 2:54 for you guys to have there for you. So it gives you about an hour before the close to follow along if you want to. Mostly bullish, Vernon. Mostly calls or puts, mostly calls.
Do you get out right at the open, or do you wait like 10, 15 minutes?
So it depends. A lot of times we'll try and let it run a little bit at the open, especially if
Okay.
it's gapping higher.
Okay.
Sometimes we'll get really, really big gaps, which in case, a lot of times those gaps will be filled very quickly by profit taking. So we just want to take our profits in. But I always have us send out an exit alert so you guys know what I'm doing with my money. Obviously, it's your decision to do what you want. I always say you can't go broke taking a profit. So if you're up nicely, you like it, take profit, you're all good there. But I will follow up with you guys so you know what I'm doing. And maybe it'll be like some of the stories today, like Debbie, who outperformed my trades, or William. We're all going to have a lot of fun together in here and hopefully get some really good results over the long haul. That's what I'm going for here. That's why I gave you guys that full guarantee window, because I want it to be very good for you guys over the long haul, not just today's trade, not just this week or this month. I want it to be a good experience for you guys over the next year, 2 years, and onwards.
Do you ever and I'm only asking this because I don't focus, I got my own video stuff that I do, but do you ever do go live with people, like do trades live or things like that, or can you tell us a little bit about that?
Every Tuesday and Thursday at 10 a.m. Eastern, I've been going live and doing a trade room, Roger, similar to what you do. On Tuesdays, I'll go through a strategy with you guys and show you a different strategy. I'll even cover this strategy in one of those Tuesday sessions. And then on Thursdays, it's more looking at market internals, looking at sentiment, sectors, individual stocks, momentum, and doing some trades off of that. So I call the Tuesday trainings, Thursday trading, but we do trading in both. It's just one's a strategy session and one's like what's going on right now, what's the outlook. So it's Tuesdays and Thursdays at 10 a.m. Eastern.
And let's see here. Sarah says this is a great question. Speak with sales. Yeah. If we're not answering, that's something I wanted to say. If we're not answering your question here, please feel free to call customer service. They get a lot of these questions, and they can help you extensively with whatever issue you may have. Are these open to non-members? No, they're 91342. They're only open to members of the program because Graham does live trades, but I'm sure if Graham has a session, or if he comes on like my program, which I have for free every day, the VIP room, we'll let you guys know, like we did today when Graham was there for about half an hour. We were going through trades, and he's more than happy to come on and go through some of his trades. Maybe give me some free ones. Maybe let me sit back and relax while he does some trading instead. I'm all good for that anytime. I'm welcoming that. And we'll invite Sarah in too. Sarah and Graham, they can take over for a couple of days. Matt and I will go to the beach, and we'll hang out here in Ponte Vedra.
That's amazing.
Folks,
exactly.
And if you have any other questions, please feel free to call. You can email me. You can email me at roger@rogerscott.com, or I don't know what Graham's direct email is, but you can always contact me. And I will definitely pass the info to Graham, and he will respond back to you very, very soon. I know Graham responds to emails very quickly, so he will get back to you without any problems.
Yep. Well, thank you guys for being on today. Thank you, Roger, for joining me.
Thank you, everybody. And again, folks, don't delay. This deal expires very, very soon. Over 100 plus overnight trades per year. ProsperityPub.com/club. Thank you so much, guys, and we'll talk to you later. Thank you guys for being here.
Thank you, guys.
Thank you, Sarah, for hosting us.
Yes, of course.
Thank you.
See you later, Graham. Thanks, guys.
See ya.
All right. Well, thank you, everyone, for joining us for the past hour here. Give me 1 second. Let me just change my screen here for you guys. If you did miss any part of today's session, just put your email in the chat. We'll go ahead and send you the replay. Let me just change my screen here. All right, Matthew, that is a great question. Let's see. Go ahead and drop your email. We can send you the replay. I'm pretty sure that was today's, that was the trade he mentioned.
Actually, they exited that trade this morning.
We did? Oh, okay.
Yep.
Awesome. Thank you, Deanna. I don't think I was here for that one. All right. For lifetime access, I'll stick around to answer those questions. For lifetime, it's $33.70. I'll put that in the chat here for you guys. All right. And Deanna, do you know that trade that he gave out, was that the free trade for today?
I don't believe so. So with the webinar, when we do a replay and he says, I'm giving a free trade out today, that's the trade of a previous day. He doesn't have one for today.
Gotcha. Okay. Alrighty. Makes sense.
It was a 40% winner though, if anybody's curious how that one went. Yes, this was yesterday's presentation.
Yes. All right. Awesome. So, yep, if you want the replay, just put your email in the chat there, and I'll go ahead and I'll stick around to collect those. And if you guys are ready to get started, if you're not already a member, go to prosperitypub.com/club or just call our team there, 904-706-3537. All right, the guarantee details is on the order form. I don't have that right in front of me, but if you click that link there, prosperitypub.com/club, you can go ahead and scroll to the bottom. The guarantee details are in the below the order form. All right, awesome. I'm going to turn off my camera here, collect these emails. But with that, thank you again for everyone to being here today. If you have any last minute questions, put them in the chat. I'll be here for a few more minutes. Valentina, it is 2 alerts per week. But we look forward to seeing you guys in the Moonshot Trade Alert Club, or the Moonshot Trading Club is what it's called. But all right, have a great rest of your day, guys.